And we are live. Welcome everyone to a special edition of Livestream Friday. I've been away for about a week visiting my mom in India. Hey, mom. My mom actually watches my YouTube channel and sometimes is even on the live stream. So, hey, mom, thanks for having me. I had a great Mother's Day with her. And now I'm back, and there's a lot going on in our world of OGIC investing, opportunity, growth, innovation, crypto. So I'm going to try and cover a lot of different things, but I'm going to get to the opportunity that's in the headline, which is potential 1,000% gain in 1 year. I mean, and the stock just looks just so phenomenal. I've been following this stock for a long time, and all the signals are just like lined up for this to be, I think, a big winner. I mean, because well, I'm going to tell you about it in the live stream, and then if we have time, I'm going to go into a little bit about what's going on with our stocks. We're setting up for an incredible, phenomenal, amazing second half of 2024, where I believe I mean, our stocks is going to go soaring higher. It's my judgment. And then we'll also talk a little bit of Bitcoin, because there's stuff going on where Bitcoin now is at 67. I mean, Morgan Stanley just put in 270 million. So there's a lot going on right now. But before I do any of that, let me do my legal stuff and put down my purple. This is supposed to come apart. I mean, it's supposed to be a puzzle. But anyway, for another time. Which is that this live stream and the content from ATG Digital Media is not investment financial advice. It is presented as opinion, information, engagement, and entertainment. All ATG digital content may contain errors, oversights, and mistakes. Please understand that investment operations, which means buying, selling a stock, crypto, options, have significant risk and can lead to the loss of your principal. Bottom line, you can lose money. I don't have to tell you about gaining money, because that's obviously good. I, the owners, employees, contractors, own, trade, transact, and the securities that are mentioned in this video and all the content from ATG Digital Media. Quick plug for all the free stuff we put out: Substack, Ballman Speculating Podcast. I'm going to do one today, pretty much after I do this live stream, so you can check into that if you are a fan of BMS, and obviously YouTube, which I don't need to tell you about because that's what we're on. Social media, very active on X, which used to be called Twitter, but has been rebranded officially today as X. Instagram, well, if you want to see a picture from me and my mom on Mother's Day, go on to Instagram. Facebook, Dean is very active on Facebook, posting memes and all kinds of interesting, fun stuff on there. So check that out. And then if you are interested in subscriptions from ATG Digital Media, $9.99 a month are where plans begin. And with that, where should we go? Let me go to the opportunity at hand, because that's what was in the headline. And then we're going to try and go into our stocks, and remind me if I forget, because sometimes I get so caught up in where I'm talking about that I lose track of all the things that I want to tell you all about. Okay, so I have been telling folks, if you read my Substack, if you're a subscriber to ATG Digital, that we're in the middle of a market transition that is unfolding as we speak. For the better part of I'd say 30, 40 years, we are inured to the idea that computer technology is going to lead. And I have pointed out in a number of Substacks that if you look at the technology, if you look at what's got the most power, in other words, technology that's been sitting there, grinding, being worked out, being all the sort of rough edges being polished, etc. It's not computer technology. It is medical technology. I mean, we sequenced the genome in, I believe it was 1999, 2000, and there's been just extraordinary amount of discoveries that we have found. And initially they were just things that were in the lab. I mean, they all looked amazing, but now we have figured out how to actually use them, and use them at scale. At scale means where you can use it across a country, across a society, across an economy, and generate huge value. Some of them are through drugs, some of them are through testing. But either way, I believe that, when we look back 7, 10 years from now, so like, yeah, in 2034, and you see one of those things which is like, what did you wish that you invested in 2024? And and shockingly, we'll find out it's not all the things that are incredibly popular today. It turns out to be something quite different. And you can go do that. I mean, go back to 2014. What were the top stocks? Well, it's not the same stocks that we are today, and they were quite different. And you can go by decades. In other words, the market always rewards growth. And growth is always driven by something that is a bit of a surprise. It is a bit unexpected, and it's driven by sort of like latent capability, latent usability, latent scaling. In other words, there's something there that has been worked on for a while. And because it was being worked on, people ignored it. So the stocks don't discount the future, so they're cheap. And then when they sort of start to emerge, it's a bit of a surprise, and it catches the market a little bit off guard. They're like, oh, like why is the stock going up? Because remember, most folks, most folks can't read an income statement. They don't know how to read a statement of cash flows. Truthfully, most folks use charting as a way to get into stocks. So they'll draw a resistance line and they'll draw a support line and all of these things. And so, actual detailed analysis, it's not really done by most people. So that's why markets get caught by surprise, because you can have a company, you can have a sector, you can have an industry sort of like be burbling underneath, developing technology, maturing that technology, scaling that technology higher, and then eventually bringing it to a point where, like now, where they're producing big sales growth, producing cash flows, and that's when the market really rockets the price of these stocks higher. So today I want to talk about a stock that I've known about this like since IPO, and it always seemed full of potential. It always seemed like it could be enormous. And it has taken a long and winding road to get there. But in my opinion, in my judgment, and remember, this live stream is opinion, it's not financial investment advice. Its time is here. Its time is here. In other words, you go and look at the company, and you go and look at its financial condition, and you go and look at what's going on. In other words, what is it betting its future on, and the likelihood of it turning out. There is a huge chasm between what is actually at the company and what the stock price is showing. And that's because of what I was referring to, which is that most people are focused on charts, support lines, resistance lines, 200-day moving averages, RSI, and all these things. The thing is that, that's, the facts on the stock, et cetera, require you to follow the company, follow details of the company, track it from time to time. And shockingly, sometimes it can take 12, 18 months before the stock markets really start to pay attention. But then once they start paying attention and all the facts, all the evidence, all the fundamentals, all lined up, it can be like a sudden switch, just like, because all the attention comes to the stock. In other words, there's like whatever 50 or 70% move, and people are scratching their heads like, what's going on? What's going on? And then the move, is driven by the early investors. And then the other folks come in. It's like, what's going on? And then word starts to get out, gets pushed out. Today by social media, in another time, it would be through analysts and all these things, newspaper articles, magazines. But today it's primarily social media. And in my judgment, in my opinion, this is about to happen to this stock. And that means there is going to be a fundamental shift in the demand for this stock. In other words, there's going to be a lot of people that are going to come to buy this stock, and in the process, simply rocket it higher, because there's just not that many companies that can show this, in my judgment, in my opinion. No guarantees. All right, let me share first of all, what the stock is. And let me do this by putting up, the ticker symbol. So it is a small-ish, small. No, this is small. I mean, we're talking, we live in a world of trillion-dollar companies. Apple, 3 trillion, Microsoft, 3 trillion, Amazon, 2 trillion, Google, 1.5 trillion. So 1.2 billion in that world is pretty small, So the name of the company is called Mankind Corp, MNKD. And let me go here. I mentioned that in my description that, let me increase the size of this a little bit so we can see. I think that's better. A little bit better. One more time. Yeah, it's a little better. You can see that is a 5-year weekly chart. You can see this is a stock that has gone nowhere for what? That's like the peak there is at 6 something in 2021. It's now 2022, 2023, 2024. But you can see like there's not been a lot of selling. In other words, it has been sitting in this range between, on the low side, about $2.50, on the high side, about between $5 and $6 or so. But nobody's really willing to sell this. Like even through what has been a growth stock bear market, which included biotechnology, I mean, people have had conviction, if not necessarily to bid this stock higher, they were certainly unwilling to sell it. And that's what that chart, in my judgment, in my opinion, shows. In other words, anytime the stock got low enough to the 2s or 3s, somebody, might have been the market makers, might have been somebody out there, was like, yeah, there's something going on here, and we're going to come in and buy. And the moment the buying interest comes, of course, the price gets marked up. And so then there's a mini rally. And then there's obviously some long-term sellers that, are willing to sell, or people who are happy with short-term gains, willing to sell, push it back down. So we've been in this grinding range for like 3 years. Meanwhile, if you're looking at the company, you'd be like, well, I mean, who knows? I mean, it just looks like a bunch of scribbles, right? But remember, the vast majority of the market focuses on charts, right? And I look at charts. I mean, it's a very short form way to kind of like get a glance at like, well, what are the expectations of investors? Because that's what a stock price represents, right? And it can tell you like, that chart, that's 5 years, by the way, that's not 1 year, that's 5 years. That tells you that there's clearly a group of people who are like, there's something here. And whenever it gets to a low price, we're buying. And at some point, that demand supply balance is going to shift, because the folks, whether it be market makers, maybe it's the smart money in biotech, who are just taking in low-cost inventory, right? They're taking in low-cost inventory. They take it in. Why? Because they understand something that most people don't. And they're looking at it. So what possibly could these folks be looking at? All right. So I did a Substack, and I really recommend you join my Substack, because we actually do fairly detailed analysis. Now, it's not like, hundreds of pages, but we get to the point. I don't think most people want hundreds of pages, truthfully. But I did this Substack on Mankind Corp. When did I do it? I did it on May 6th. And we've had it in the gold tier portfolio for some time. So let me go through the Substack and kind of like lay out what is going on at Mankind that is different than what has been happening at the company. I mean, they came IPO, I think in like 2000, and I think it was right before the 2008 global financial crisis. But, that's kind of like past history here. So what is going on here? So I've been a biotech analyst on Wall Street. And the thing that people are really chasing after, like, I mean, I'm talking about analysts and, people who want to own the stocks. We want stocks that can generate, that have control of drugs that sell over $1 billion per year. Those are referred to as blockbuster drugs. Sell over $1 billion a year. And in my 30 plus years of investing, like you find one of these, yeah, that's like going to be an enormous return. I mean, there are many stocks that are no longer in existence because eventually they were bought by a much larger company. But I think of like, there's just been enormous stocks. I mean, where they had control of one drug that generated like $1 billion, and yeah, it went to and on to become like a $30 billion company. I'm not saying it's going to happen overnight, but from 1 billion to 30 billion, yeah, that's a really good return. So what's going on here at Mankind? Well, the thing with Mankind is that they have a unique patented delivery system for drugs. And essentially, it uses inhalable nanoparticles to deliver drugs into the lungs. There's a lot of benefits to this kind of a platform. It goes right in the respiratory system, bypassing metabolism in the liver. Inhalable drugs are, you don't need to have an injection. There's no IV. So that means that people take it more often. So in high compliance. There's also uniform release, fewer complications, and they're particularly good for conditions like lung cancer, cystic fibrosis, COPD. In other words, all these things that are in and around, the lungs. And the other thing is that there are many drugs that could use this method of a delivery system because we've not really had something so efficient that works. So one of the great advantages of having like a delivery system is that they can take old drugs that are already approved. And if you want to develop a new drug, it would cost nearly $3 billion and 10 to 15 years to develop a new drug. So imagine you could just like shortcut this. No need to spend $3 billion. No need to go through 10 or 15 years of development. You just go find old drugs, put it on your improved system. And then because these drugs are already being used, you don't have to like have a gigantic sales force to go and persuade doctors. You're just like, well, this is an inhalable version of this drug, and you will have, much better compliance. It works much better, fewer side effects. Doctors are like, sure, I will prescribe this. And they proved out this case with a drug from another company that is in our gold tier, United Therapeutics. That drug was called Tyvaso DPI. Tyvaso DPI. And you can see here in this, let me make this a little bit bigger. All right. So you can see prior to Mankind's inhalable system, the Tyvaso inhalation solution is this fairly large thing. You can see it's 4 times daily. You have to set up the device, clean the device every night. It has to be charged. And then you've got this small little whistle-sized thing, which is what is Mankind's system. It's small, it's portable, you carry it in your hand, you insert a dose, and you take a breath, and you replace the inhaler every 7 days. In other words, it's disposable. You go from 4 times, the dosing is the same, 4 times daily, but it takes, each dose is 2 seconds versus 2 to 3 minutes. So when you have a very powerful system, it will show in the economics of it. And Tyvaso DPI, when United Therapeutics went to license the inhalable technology from Mankind, I was shocked to find out that Mankind is getting, including manufacturing, nearly 30% royalties. I can tell you. In analyzing biotech companies, I have never really seen someone get 30% royalties. That is just a gigantic number. That's a shockingly high number, as I put it. So there's a reason for that, which is like, this is incredibly effective. This is incredibly convenient. And United Therapeutics compared the two and be like, yeah, we can sell a lot more if we put it into something like this versus something that requires, their old system. So Tyvaso DPI sales are already, and it was just approved about 18 months ago, is already running at an annual pace of $1 billion a year, which would then put Mankind on track for like nearly $300 million in royalties, manufacturing fees, and all these things. In other words, they're like sitting on 30% of a blockbuster. Remember, blockbusters are highly valued. And that's not the only thing that mankind has. They have developed on their own, spending 12 to 15 years and $3-4 billion developing an inhalable fast acting form of insulin, which they've had approved for several years. Now, the insulin market is very tough. It's dominated by the insulin mafia, which is Eli Lilly and Sanofi Aventis and Novo Nordisk. So, of course, a new method, even though it seemed incredible, etc., has had pretty tough going getting established. But they are doing trials that are concluding this year that are going to show that it's superior to many forms of sort of traditional insulin treatment. And that, in my judgment, is going to spike Afrezza sales, which is the name of their fast-acting insulin drug, higher. And then they're also doing a trial with kids, and that trial will also end in 2024, which means sometime in 2025, you're going to have like a lot of kids who certainly are going to prefer, just inhaling rather than, multiple injections, pinpricks, measuring stuff, using Afrezza. So a lot of catalysts going on. And then I mentioned earlier that they have learned their lesson from spending 12, 15 years developing Afrezza. They took a long time. It cost $3 billion. They're like, we're going to go for easier stuff. So they got 2 approved drugs that they're using with their inhalable system. And I'll just put up a picture of their pipeline. You can see here all the Afrezza I mentioned, and here's Tyvaso DPI. But then you've got this. All right, my pronunciation of these things is going to be terrible. Clofazimine, which my research says potentially generates $300-400 million, and it would all go to mankind. And then this nintedanib, whatever it's called, is a $1 billion drug. Make it easier to take, etc. They'll take huge market share. So in other words, you've got multiple catalysts. You got high probability of drugs being approved by the FDA, which is definitely not a given, and even more drugs that will be prescribed once they're approved. So you've got stars aligning for Mankind Corp in a way that has just simply not happened before. And in the past, Mankind Corp has struggled financially. I mean, they kept issuing shares because, it cost $3-4 billion to get, their inhalable fast-acting insulin approved. But they're now getting $300 million of royalty money coming in from United Therapeutics because of Tyvaso DPI. So they now are, they're sitting on a ton of cash. And they are more than enough money to fund all of their trials. They don't need to issue shares anymore. So the financial condition of this company now, they are in rude health. They got sales going up because of the royalties streaming in quarter after quarter, going up by 50-60%. Afrezza, which they have been developing, which they internally develop, and so they own 100% of, has multiple catalysts to lift sales higher. In other words, 2024, 2025, and beyond, sales growth is going to continue at 25, 30, 40%. They got plenty of cash. Then they've got drugs in their pipeline, which are not going to come about in like 7 years or 10 years. That clofazimine is going to be like in conclusive trials at the end of this year. It's probably going to get approved sometime in 2026. Which means you've got now another $100 million drug, which is almost certain to be approved, almost certain to be prescribed. The same thing with nintedanib. Okay, I didn't get the pronunciation right. Same thing. That's a $1 billion drug. So you've got everything lining up: growth, money in the bank, pipeline, potential blockbuster drugs. It's all there. But going back to this, which is that the stock for now does not really represent the financial condition of the company today or its potential. It's sitting there. Why? Because, things have only changed fairly recently. Like the royalties only started coming about last year. So the market like sometimes takes a little while to really like see this, but once they discover it, it draws an audience and you bid up. So if I'm right, let's take this chart out a little bit longer. Let's go 10 years. This is a weekly chart, by the way. Yeah, where can it go? Where can it go? How high could it go? I mean, it's almost certainly it's a $1 billion company at its current price, which is what, $4.50 or something like $1 billion company. But this is a company that controls a 30% royalty on, I believe the peak sales on Tyvaso DPI is expected in something like 3 to 5 years, and is estimated it's going to be $3 to $4 billion. In other words, Tyvaso DPI by itself might generate for mankind nearly, yeah, I mean, 3 billion would mean what? $900 million. $900 million. Meanwhile, Afrezza, which is its inhalable, fast-acting insulin, is just getting going. They're going to, start to grow that, and that has the potential to be the blockbuster that many people thought when they first developed it. It's taken a long time, but they finally lined everything up. And then they've got multiple drugs which can be approved. And as other folks that are developing drugs for those various conditions, lung cancer, COPD, are like, well, wow. I mean, we want that technology that generated $1 billion, multiple $1 billion for United Therapeutics and Tyvaso. So DPI, other people are going to come to them and other 30% royalties. So this is why, I chose to make this the topic of the live stream. And I picked actually Mankind as a breakout stock for 2024. I think I picked one stock and one crypto, and Mankind was it. And it's because of this, there is so much latent potential here. And oftentimes, in my experience, the year where you have the transformation, the year that you have the transition, where the market recognizes that this stock price does not represent the present, does not represent the near future or the far future. And as people come, they will pay much higher prices. How high could it go? Well, look, I can't guarantee it, not promising it. It's not a certainty. But I mean, you could see this jump to being a $5 billion company. That would not be a surprise. There are multiple companies in the stock market that have a lot less revenue than 300 million a year. There are many biotechs that don't even have a 30% royalty or a potential blockbuster like a Afrezza, or have a system that is highly valued that you can put old drugs, in other words, almost certainly guaranteed to get FDA approval and sales. Yeah, I mean, this is very cheap compared to many drugs, many companies in the stock market, and certainly many drugs, even among biotech, etc. So that's why I'm like, this has the potential to, 10x in a year. Not guaranteed, not certainty. Why? Because the difference between what the company is and what you're seeing there, right? That chart, which is what everybody's focused on. When will people come to it? Like when it starts to break out, and then, short-term traders will start to bet on breakouts. That will draw other people in. People say, what is this Mankind? Most people never heard of this company. Most people have never heard, don't understand the particulars of this business model that they are unique to. So that's the bottom line on that, which is that, in my opinion, in my judgment, this could be an enormous, big, huge, phenomenal, amazing 12 months for MNKD, Mankind Corp, which is sitting in our gold tier at ATG Digital Media. Gold tier is the second tier, so it's not $9.99. I think it's $14.99. You can check it out if you want ongoing coverage. United Therapeutics is also a perfectly good stock. It's a bit bigger, but it doesn't. It's a company that doesn't have as many emerging catalysts. And Mankind Corp is the one. All right. Before I go to questions, I want to quickly go over a note that I put up on X and cover it for all of you to lay out why I believe we are about to finally put these last 3 years behind us as opportunity, growth, innovation, and crypto investors, and look forward to some extraordinary huge gains. Extraordinary huge gains. All right. I won't read everything, but I really recommend that if you don't follow me on X, that you do. I'll try and make this as short as I can. All right. So I started out by talking about market expectations. If you are an active investor, you're very focused on interest rates, and everybody is awaiting with eager anticipation. Oh, the Fed is going to cut, and everything is going to be hunky dory. Yeah, and the world will go to milk and honey. But that is not my experience from 30 plus years in the market. Interest rates generally get cut when the economy is weak. And that means that the sales and earnings and growth of particularly for economically sensitive companies, they get crushed. Yeah, they get crushed. And I bring up housing. I started to see over the last couple of weeks, housing like macro data is coming in super weak. You can see the stocks being sold off because housing is among the most sensitive to economic growth and actually is a leading indicator for slowing growth. If I can remember going back to 2007, 2008, the housing market really started to slow down sometime in 2007. The Federal Reserve started lowering interest rates, I think, in early 2008. So, and that's been my experience in almost every cycle, which is like people think that low rates are going to help, but low rates also come with a certain market environment, which is that sales are going to be going down, profits are going to be going down. Yeah, that doesn't draw people to want to invest in those things. So thinking that rate cuts are good for all stocks is a rookie mistake that many people make. Rate cuts are a terrible sign for economically sensitive cyclical stocks like housing. And weak housing numbers, I mean, I believe like the permits are down. Pretty much every number is coming in very, very weak. It's telling you that somewhere in the next 3 to 6 months, you're going to have economic weakness. In other words, you'll get your rate cuts. But the rate cuts will bring and expose all the problems that the rate rise. And remember, we had an enormous rate rise. We went from 0 to 5.3%. It exposes all the problems that the previous rate rise, will have created. In 2007, 2008, as everyone knows, it was mortgages and derivatives. In this cycle, it's commercial real estate debt. This is, I mean, it's nowhere near as big as what we had in 2007, 2008, but it's nonetheless, it's in the trillions of dollars. And that's driven by the fact that office buildings, et cetera, have lost enormous amount of value. And they were largely put up by debt because of the low interest rate, zero interest rate policy that the Federal Reserve had between 2008 all the way until 2021. So that's one of the issues. And then there's just the general hangover from the extraordinary amount of debt that companies just issued willy-nilly in 2020 and 2021 when the Federal Reserve, in the COVID panic that ensued, I mean, people went like hog wild issuing debt. And yeah, and that debt is going to come due. Nearly 40% of that will have to be rolled over between 2024 to 2030. I believe 2024 is 4%, 2025 is 6%, and then it rolls higher, as you can see by this chart here. This is, going to be a problem. Is it going to be a disaster? Is it going to be like 2008? No, it's not. But it's still going to take down a number of companies that probably should have never borrowed this money. They never had the economics to borrow it. Why were they driven to do it? Because, I mean, it was so low. I mean, interest rates were negative for some period of time. You could get, for 5 years, you could pay 0.5%, 1%, 2%. It seemed like the deal of a lifetime. But no one imagined that we would be in 2024, which is when the debt was going to roll over, and that you might have to pay double or triple or quadruple, or that into a weakening economy, your cash flows would look so bad that potentially people may not even want your debt. So those are the sort of like the most obvious crises, if you will, that are out there. And we're getting near hammer time. It generally takes about 12 to 18 months for rate cuts to really begin to bite. Yeah, I mean, So think back, the last rate hike was in July of 2023. So the rate hammer, yeah, begins to hit with like full impact on some parts of the economy, the cyclical parts, the economically sensitive parts, the legacy parts. Yeah, you'll see the full hit really in January of 2025. And markets look forward by at minimum six months, usually like they'll look out even 12 months or more, which is why, oftentimes people will say like, Paul, the earnings came in this, but earnings are backward looking. It's the forecast that drives the price action in stocks. So if you go look, and I looked at a number of companies, I told you the housing data, you can, Google for it, housing data, and you can see it's coming in weak. What are the other economically sensitive sectors? Chemicals, semiconductors, industrials. These are all showing weak growth. And that tells you that, I mean, we're, quite, well nearing the peak hammer time of high rates hitting these companies, and we're starting to see it. But there is a twist today that didn't exist back in 2008. Today, we have a digital economy that runs counter-cyclical to the legacy economy. In other words, the legacy economy is very tied to, the 90% of the market that is 90%, of the economy that is not digital. And the digital economy, I can see, I mean, it puts up gangbuster growth numbers, 7%. It's not every year. It's not like, and it's increasing at a rate that is significant. I mean, 7% is a very high number. It is, 2 to 3 times more than the legacy part of the economy. Now, the digital economy is very sensitive to interest rates. Why? Because their peak sales earnings are way out into the future. I mean, you think like of a company like Tesla, their peak sales, when you consider all their EVs, autonomy, Optimus, Tesla Semi, I mean, there are project after project. Their peak sales are probably 10, 15 years. However, if you move the interest rate down, and there is a calculation for discounted cash flow, I'm sure the more sophisticated of you are aware of it. Yeah, you move it down by 1 or 2%. A 1 or 2% drop in, what these are called long duration investment means huge jumps in their value because their sales and profits are rising, for years, if not decades. And lower rates make their cash flows way more valuable. And it also explains why, so many of these stocks just got smashed in the last 3 years, because the reverse is true as well. In other words, when you lift rates, they're very sensitive to that higher rate, and especially during inflationary periods where future cash flows might be worth less than current cash flows. It's a bad combination. But we have stable inflation today, and if I'm right, the cyclical economy is setting up for weakness. Meanwhile, our stocks, they actually have continued to grow over these last 3 years. The digital economy is counter-cyclical. It's counter-cyclical to what goes on. In other words, it doesn't depend on industrial growth for its growth. They've got their own cycle, and it's separate. And in all likelihood, if I'm right, 7%, I mean, which I showed you earlier from that infographic, it's going to be 10 or 12%. We're going to go see the digital economy potentially double in the next, I'll say, an aggressive estimate would be like 7 to 10 years. So that would mean like, a 7-8% compound annual growth rate. Some years might be 10, 11%. In other words, the growth for our companies, the OGIC sector, is going to be gangbusters, while the legacy cyclical stuff is just there. I mean, I'm seeing growth rates of like, -3, -4. The high numbers are like +3. Yeah. So the market's completely wrongly positioned, in my judgment, in my opinion. Second half of 2024 and 2025, we are going to see our stocks slowly and then suddenly just push higher. I believe by sometime in 2025, we'll start to approach the old highs, and then we will take them out. And 2025, 2026, at some point in time, like the stocks at where they are today, they're going to look incredibly cheap. Those of you who are with ATG Digital Media and have been with me, I don't have to explain what digital economy stocks are. These are younger, smaller growth companies employing using new technologies to do things. And, another quick plug there. So I'm going to stop there. I'll maybe get some questions on Bitcoin and answer it there. But Bitcoin, there's been investments that have been made now by pretty much every major bank, including JP Morgan. Jamie Dimon, who claims that Bitcoin's a fraud and a scam. Wells Fargo today, Morgan Stanley announced that they have put $270 million into Bitcoin. So, I laid out a scenario where I told you, pretty much everyone is going to want a piece of Bitcoin. And now they have a way to get it through these ETFs. There are now ETFs in Hong Kong, obviously the United States. There's one in Switzerland, and more are coming. And and we've just had, the halving happen last month. So things are lining up pretty much for all parts of our investments. And with that, let me see what is in the questions. We got some regulars here. Raul welcomes me back. Thank you. Appreciate it. Raul says, I bought Robinhood at 17. Where's Robinhood today? You know what? Let me put up. People like charts. This is one thing I have learned is that people like charts. So let me. So here's Robinhood. This is a great example of what, in my opinion, is going to happen. Let me scroll this up here. So we got Robinhood arriving at $20. With the old high, the IPO was at about 35, a spike up to 85. Now, if I'm right, when Robinhood is a digital company, their entire platform is digital. There's very few analog parts to it. It makes them more efficient, makes them more amenable to being able to implement artificial intelligence or any new technologies. So they're going to see, the legacy brokers are going to struggle, and Robinhood is going to boom. If I'm right, no guarantees. But if I'm right, then we're going to see this thing, go up back to its highs and take it out. Seems unbelievable right now, but we will see what was going to happen. Sid asks, why is Morgan Stanley buying Bitcoin? For the same reasons that we have bought Bitcoin. They want to benefit from its price rise as a result of a worldwide audience wanting a digital store of wealth and making it part of critical part of their investment strategy. Whereas before, gold might have gotten the store of value sort of like allocation. Today, some part of that is going to Bitcoin. Raul says, saw your picture with your mom on Facebook. I was very happy to be with my mom. We went out to brunch in India, and so I put up a picture. You can go check it out. It's on Facebook. It's on X and Instagram as well. Hisham says, hey, back to you. Some good wishes here from Anthony Perry. Thank you for your good wishes, Anthony. Appreciate you. Thank you, Paul, for Ouster. Actually, I got we don't have Ouster in the portfolio anymore. I got a question yesterday in the gold tier asking me why I didn't put it back. And the truth is that we have gone with Elon's view, which is that LIDAR is at best going to be a very limited technology. It costs too much. Its utility relative to cost is too low. So we sold it for a loss and we've stayed out. Maybe that judgment will be right. Maybe it will be wrong. But I don't think we're going to go back into Ouster, whatever it's called. And you have my update on Mankind. SP says, welcome back. Any other thoughts on Fannie Mae and Freddie Mac and perhaps the perennial commons versus the junior preferreds debate? I don't think there's a debate here. If Fannie Mae and Freddie Mac are going to be released from conservatorship, they'll all go up. It's just the upside is different. For the common, the upside is related to future cash flows. For the preferreds, the upside is dictated by par value and interest rates. So they have deferring payoffs. The preferreds have potentially a more certain payoff, but a lower payoff, because yeah, the par value on these are either 25, 35, or 50. And then they will vary themselves relative to interest rates. So as interest rates go higher or lower, then you would look at the yield of the preferred, and it'll act like a bond, something like a bond. Fannie Mae and Freddie Mac, it's going to be relative to the earnings power of these companies and where they get valued like regular companies. So in my opinion, there's no debate. I mean, they'll both do well if you own them. So that's what it is. Pulverizer, welcome back. Free money is hard to pass up. I agree. Anybody offering me free money can, you can just subscribe instead. ASTS. I don't really know that stock. Let me see. I'll put it up here and see. I don't like to. AST Space Mobile. I have to admit, I do not know the stock, so I don't want to offer you an opinion about something that I don't know. Yeah. I mean, it's a huge spike up recently, but I would have to look into it some more. Let's see here. Paul, hi Paul. Have you spoken about ABIO, Arca Biopharma? Okay, let's put that one up. ABIO. What about ABIO? You can see charts are very short form of like sort of looking. Again, I can see why there's interest in these because like these have all spiked up, but I do not know the stock either. It has not come across. Obviously, it's had it's gone from being at the peak a $22 stock to a $1.56. I would have to look into it some more to give you a viewpoint, but it's not in any of our portfolios. Explain why. I think I just did that. So Tracy was listening, and I'll mention that. Any updates on Tesla in regard to new comp plan doesn't pass? As far as I imagine, I'm going to say that in all likelihood it's going to pass. And if it doesn't pass, then they'll pass a plan that is maybe more reasonable to whoever it is that objects to the old plan, and something will pass. I mean, obviously a Tesla without Elon is unthinkable. As a shareholder, I just think that when that original deal was made, there was no certainty that it was going to work out. There was no certainty that the Model 3 would be a success. There was no certainty the Model Y would be a success. Truthfully, I mean, it seems unfair and wrong and kind of un-American to take away something that was fairly and squarely. Everybody thought it was a good deal at the time. And we're like, yeah, Elon, you'll work for us for free. And if it works out, yeah, there's this enormous payoff. And now it's worked out, and all the people are like, oh, yeah, no. So I don't know. I hope Elon gets his due. He certainly earned it. I mean, he sleeps on factory floors. He works 12, 18-hour days. Yeah, I mean, this dude has got to be like the hardest working human being on earth. So for me, I mean, I voted for his plan, and, everyone can vote for themselves, but I want to tell you what I chose to do. And if it does pass, what about dilution? Well, the market will have already incorporated that. I mean, the comp plan, has been known for many, many years. So this would not be new information. This would be something that, is priced in at this point. Remember, I mean, Tesla stock is down nearly 50% from its peak. So I would believe that this is priced in. When do I expect mankind to break out? Well, I'm telling you, 12 months this year, 1,000%. So that's as specific I can be. I can't tell you by the day or week or month, unfortunately. Next question. What do you think about BLNK, Blink Charger? All right, since we're doing this, let me put up Blink. We do own a different one in, I believe, put in the wrong ticker here. Let's go back. Obviously this is an EV charging company. I've chosen one company, EVgo, put it into, I believe it's in our diamond portfolio, which has our micro cap and very small cap stocks. And in my judgment, my opinion, that's a better company. But in all likelihood, one or two of these will turn out to be good. Blink could be one of them. I mean, there are two or three of these that are out there. EVgo seems to be better capitalized, seem to run a better operation, in my judgment, in my opinion. But oftentimes, when when one stock rallies, it will take the others with it. So, I mean, this has a perfectly good chance of doing well as a stock, even if it is not necessarily the best business. Let's see. Next one here. Always appreciate your thoughts. Thanks for takes on GSCs. You're absolutely welcome, sir, or ma'am. I'm not sure. Hi, Paul. Can you give me some insight into Roblox and Unity software? Yeah, I mean, Roblox is one of these companies that, in my judgment, in my opinion, where, yeah, their peak sales and cash flows are way out into the future. They've been hammered in this, everyone shorting, selling long duration stocks. Like it, their growth stocks, I believe that they'll recover and go back to their old highs. Operationally, last couple of quarters, they've been doing quite well in terms of growth. They've cut some costs. And Unity software is a little bit more chaotic as a company, but nonetheless, for what they do, what their software solutions, in my judgment, in my opinion, is unmatched. There's nobody else that provides that particular service. And so you want to do metaverse, coding, etc. You need Unity. You need games of a certain kind. Yeah, you're going to end up licensing Unity software. So long term, yeah, I mean, that's where it is. I mean, right now, the near term catalyst, if you will, at least in terms of business operations, is in favor of Roblox in these terms too. Unity might be like probably, I think they're in the business of, like, they've just announced cost cuts, etc. So somewhere in the next 6 to 12 months, they're going to start to report better sales. That will draw like an audience that, of short-term, medium, long-term investors, traders that then come and sort of like boost it up, in my judgment, my opinion. Next one here from Saroj. Hey, Paul, welcome back from India. Thank you. I hope you had a great time there. Yes, I did. Regards to your mom. My question is, when will the biotech stocks come back? It's been a long time. I'm negative big time. Yeah, I mean, I don't think we owned a lot of we owned some and we sold a lot. So I don't know if you're an ATG Digital Media subscriber, but we cleared a lot of the older ones out, especially the ones that were in 100x. We sold a lot of those testing companies, and we have a completely different portfolio. That portfolio is not doing incredibly well, but it's not doing poorly. So I'm going to imagine that your stocks are your question is reflecting certain stocks that we had, like when I was at Banyan Hill, and we may have turned over a lot of those stocks and sold them out. And we have a different group. They're definitely not big time negative. They are, some of them are down a bit, but there are also a number that are up. So I'm not sure how to answer your question. Pulverize asks, what is Tesla worth without Elon? That's a good question. I mean, it's like asking, well, what was Apple worth without Steve Jobs? I mean, Steve Jobs is the visionary. Steve Jobs was like the design architect. He was the product architect. And yeah, I mean, Apple has 5x since Steve Jobs died. So if you think in that way, is there enough today at Tesla for it to continue for whatever? Is it 5 years, 10 years, 15 years? I've got to believe that between that EVs are like a 80-90%, like in terms of like the planning, preparation, and what they would need Elon for. That's about 80-90%. So that's I'd say, in my opinion, a 10-15 years were good. Autonomy is at the same point as well. Now, the scaling up of something like Tesla Semi, well, that would definitely need a lot of Elon. Optimus would need a lot of Elon. So we've got at least, I'd say, two major business lines that are not absolutely dependent on Elon being there. And that is the EV business and autonomy. So I would say it's still worth many times more than what it sits at today, in my judgment. That's a question on Blink, which is a repeat, which I answered earlier. Tracy says, thanks for answers on Tesla. You're welcome, Tracy. Anthony says, speaking of chargers, did you hear that the Tesla charger is now the national standard If so, any thoughts on that? Well, it was inevitable, being that um, if you have an EV and it's something other than a Tesla, and you are using one of the other charging, I mean, Charge Point America, I forget. I used one a couple of years ago. I pulled up, I think I was on my way to dropping my kids off to camp in South Carolina. So I picked this hotel, which had one of the alternative charging stations. And yeah, I couldn't get the thing to work. The credit card swipe didn't work. In other words, their standards are not the same as Tesla. So, and then of course there's the plug charger, the type, which was like didn't fit in. I needed a special charger. It will certainly make things a lot easier if everybody becomes uniform, and obviously that's good for Tesla, because now everybody can use their supercharger network. What is the news on DDD? There's no particular news on 3D Systems other than 3D Systems is part of the digital economy, and they're counter-cyclical. And we have seen, in my judgment, we've seen the bottom on like the cyclicals in the digital economy, 3D Systems, laser companies. And so it looks like it is setting up for a run, and then it will, yeah, just like all the other companies, but probably a little bit sooner, a little bit faster, start to move up, in my judgment, the second half of 2024 and into 2025. Peter says, thank you for what you do. I appreciate all of you being here on this on this live stream. And Ninja Cringe says, any updates on FCL? We no longer own that stock. We have sold that out of our portfolio, and there are no plans to put that back in. I've sort of like have been forced to constrict our bets, just like with Ooster. Somebody wrote me and said, why don't you have this in? We can't own every single one of the stocks that we used to own when I was at Banyan Hill, where we had, I don't know, 7 or 8 services. We have 3 stock picking tiers, where the most stocks we can really do is somewhere between 50 and 70. I mean, that's in there. So we don't own that anymore, and I have no view on it at present. With that, that's, I believe, the last questions that we have. Just a quick mention. Mankind Corp, that was the subject of this live stream, in case somebody came in at the very end. I also did some stuff on why our stocks are setting up to soar in the second half of 2024 and beyond, and then a little bit on Bitcoin. So if you came in late, that's was the content of the live stream. John says, some last question here. Welcome back. Thank you. Any update on Plug and QuantumScape? I got in late today. Apologies, already covered. No, not covered. Plug Power and generally the new energy group, which is part of the digital economy. These have all bottomed out, in my judgment, in my opinion, and are setting up to go up. Plug Power has seen some, short covering rallies, and we're going to see that. It's going to be volatile, but in my opinion, the bottom is in for all of these stocks, and we should start to see them, lift slowly higher. I mean, these are highly cyclical, so the price action is going to be volatile and very sharp. So if you're not in it and you like them, you probably should, look to get back in my judgment. And I think it was like a couple of weeks ago, I put together the steps portfolio where I was like, hey, we're seeing price action that tells us like these stocks have bottomed out and it's time to get back in. Raul says, finally, gold and silver up. Will they continue? Yes, in my judgment, they will, because gold and silver require 2 things to be true. It needs low interest rates. It's also a long duration trade, but it also needs inflation to be higher. And we are in that general environment. While, we've seen a spike to 9, back to about 3, but it's not going to go back to 1 or 2% in my judgment. So it'll go higher, but Bitcoin will outperform both by a lot, in my judgment, and that would be a better bet. All right, I think that's the last one. Hey, thanks everyone for showing up for this Friday live stream. Thanks for all the good wishes. Hey, Mom. All of you guys can say hi to my mom. I was watching in India, and I will be back on regular live stream Tuesday coming up soon. So get your questions ready. And then, yeah, if you are not a subscriber to ATG Digital, ATG Digital. With that, it's me, Paul, saying bye.